folks, let's go over to my browser here. We're going to go over to ord-oracle.com. Now, every Tuesday and Thursday, we have Tim Ord on the line. Ord, of course, we enjoy having him come on and share his analysis. I think it gives us a really good kind of compass to see what's going on here. You can go to his website at ord-oracle.com. He has his newsletter, his book right there. You can contact him as well. Additionally, if you go over to TFNN.com, you go over to the services tab. We have two fantastic webinars from Tim Ord. That is the Secret Science of Market Tops, the 6 secret ratios every trader should know. Tim Ord, how are you doing?
Good. So last Tuesday, we were talking about, I was hoping the market would actually remain down this week, steady.
Yes.
And there's a reason for that. If we go to chart 1, first chart, this is a weekly chart, goes back a couple of years, or close to 3 years, I guess. But anyhow, I circled the times when the this is a weekly chart when the SPY closed below the lower Bollinger Band, and every time you did that back in 2022, even though that was kind of a bear market, we still had bounces once you got to close below it. So we actually had 3 little closes below it every time it bounced. And back in October of 2023, we had a close below it. And again, right now we have a close below it. I blew up this window over here. You can kind of see where it is.
Yes.
It's way below the lower Bollinger Band. The lower you get, actually, the more bullish that signal is. A lot of times there's a gap just out of the box from this over the weekend. So today's Thursday. We need to close below this the lower Bollinger Band on Friday, since it's a weekly chart. And obviously, I think we'll probably do it. But add to the bullish short-term picture here, if you go below the chart, I circled a couple of different times when the Bollinger Band also closed right around the lower Bollinger Band. That came in October 2023, and we have the same thing again here. We did it other couple of times, but those other 2 times back in here, the weekly SPX or the weekly SPY didn't close below the lower Bollinger Band. Okay. Here we have the SPY VIX closing below the lower Bollinger Band, along with the SPY closing below Bollinger Band. That's the reason why I didn't circle these here, because you weren't below. So you got 2 extremes going on. You got the VIX and you got the SPY. So it's a lot to do with probably the tariffs, and also funding the government, whatever. But evidently, it's going to be resolved over the weekend. But this is a bullish setup. I said on Tuesday, this is probably a good time to buy. I actually already bought, but if you get a close on a weekly time frame below the Bollinger Band, I guess you could wait till Friday to do it. But these are high probability trades. You can actually do research on your own going back over the years, and you see this remains consistently true going back.
Right.
So it's an easy study to do, but I didn't go back 10 years because you wouldn't be able to see it. So, but anyhow, I just went back a couple of years so you can see what's going on. Go to the second chart here. All right, I took this period right here, which is basically 2022, and I kind of blew it up. This is what it looks like. And so you get a close there, you got a close there, you got a close there each time it bounced. This was not a great bounce here. But the key on this next bounce will be the volume. If you notice going into this low, the volume kind of in general increased. And on the bounce, you see how light that volume is compared to the rally?
Yes.
It
comes right back down. Yep.
Yeah, it comes right back at you. So here you're going down, volume's relatively high. You get a bounce, volume just minuscule. Here you get another volume, pretty big volume going down. And as the market it did bounce, actually bounced above the mid Bollinger Band, but as it rallied, the volume actually continued to decline. So that's probably what we're going to have on this next rally. Probably something looks similar like this. You had decent volume going down. If that volume doesn't come up, or at least equal to the down volume, that rally is going to peter out to the upside. So that's what we're going to be looking for.
Can I ask a question? What if tomorrow, right, we get kind of like a premature bounce a little bit? We close still low, but above the below the lower Bollinger Band. Does that kind of change the way that you might see a reaction, or is that just kind of like an earlier, let's say, reaction to it?
No, long as ideally you like to see the open and close. The best signals come over time when you both get the open and close below. So even a bounce tomorrow, long it doesn't close above the lower Bollinger Band, that's fine. But if it gets closed for some reason, a big rally comes when it closes above the mid Bollinger Band, that takes a lot of energy out of the market. So that's what we had actually last time. Sometimes those trades, you go below the mid Bollinger Band and you close above them. Sometimes you rally, sometimes you don't. This one didn't as you gap down. But now we got market really extended to the downside. So the Bollinger Band kind of measures the equilibrium of the market. So the equilibrium is basically the 20-week moving average, which is that dotted middle line on the Bollinger Band. So if you stay around that line, the uptrends usually continue. You can get a little bit above it, a little bit below it, but in general, you stay above it. But if you get too far from it, either up or down, it usually comes back at you.
Okay.
So anyhow, here's what we're going to look for. This is one. It'll be volume. Volume has to increase on that rally. If it doesn't, it's just a fake rally, I guess you might say, and we'll look to short it. But for some reason, volume comes in higher, or at least equal to the down volume, then that's going to be a bullish sign. Here would be another bullish sign. For some reason, today's reading on the ZBT, which is the wag breast thrust indicator, came in at 0.39. Yesterday was 0.40, or Tuesday was 0.40, or 0.39, still in the parameters for a low. So that indicator needs to get to 0.40 to 0.60 in 10 business days, which is basically 2 weeks. Mm-hmm. And if it does, that would add to the, and it may do it. I don't know. I'm thinking not, but it may do it. I thought we might find support in this region here, and I still think there's a possibility, but we'll have to wait and see how this rally performs. But you got two things. You got volume has to expand, and basically this is an advanced decline kind of an indicator, and that has to expand. If both of them don't, then it's just a bounce and a downtrend.
I see.
See, it's awful quick. Oh, here's, did I cover this indicator?
I do not think you did last time. The bull-bear ratio? No, I don't believe so.
All right, this is, the bull-bear ratio, we're 0.32. This is down where bottoms usually form, so I'm thinking this rally coming out here is at least going to be a multi-week rally.
Okay.
So even in the bear market, it bounced multi-weeks. So this is not going to be like a 1 or 2 day rally. It's going to try to go up for a length of time, probably into April, maybe mid-April or something. Okay. And so it's not going to be a 1 or 2 day burst. It's going to be a multi-week rally. So we'll see how that performs. So that's what I'm going to talk about. So this is not like a day trade to the upside.
Fantastic. Well, Tim, please stay right there. Folks, we'll be right back with Tim Ord after the break. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. Tim, before we went to the break, we were looking at the bear-bull ratio, but it looks like you might have flipped off.
I switched. Okay, we're back to the weekly SPYs.
Yes.
Anyhow, when the market really pushes below the lower Bollinger Band on a daily, means less than a weekly. Weekly means less than a monthly. But anyhow, on a weekly, it really has an impact. What I'm trying to point out here, a lot of times you get at least around to the mid Bollinger Band. Yes. And if you go to, there it is. If you go back over here, if you notice, the Bollinger Band comes in around 595, mid Bollinger Band. That would be a legitimate target to the upside. It may do a little bit more, a little bit less, but usually gets in that vicinity. Especially if the lower you close below the lower Bollinger Band, it's like a rubber band being stretched. The faster that rally becomes. So next week's probably going to be real energetic compared to what's going on right now. And I was hoping the market would stay kind of still over the last couple of days here. And it sort of is. If you notice, volume on today's market is going to be a lot less than it was a couple of days ago when we broke through that low. So, and do I have something on a... I don't have the daily SPYs, but if you look at the VIX, if you notice that the SPY is sitting at a new short-term low right now, and the VIX is higher than yesterday's low, and actually last couple of days low. So that's actually a bullish divergence. So the market's in the process of making a low right here.
Okay.
So, but anyhow, it's we're done with that. I guess we got any questions on it?
I don't see any questions right now. I know we have some gold to go over.
Yeah.
I mean, gold, the contract, I believe, is making all-time highs. GDX making some decent moves to the upside today. I think we're up, what, like 2.85%, 3% right now? Not so bad.
Yeah. Okay. This is, we've kind of been talking about this ratio. Actually, I showed the gold-silver ratio, I think, last time. This is a weekly HUI gold ratio. And kind of the same setup. It gets cheap. It measures inexpensive. Gold stocks in general are inexpensive to gold when this ratio is below 0.12. We're coming in around 0.11 right now. And if you bought when that ratio is below 0.12, which is these shaded areas, this chart goes back to 2013. Shaded areas has usually been a good buy. And actually, even though we're up against a trend line here, this is a trend line this is the HUI. There's one on the XAU, and there's another one on GDX. They're all in basically the same picture. They're up against that trend line, which this one's near 350. And this ratio is rising a little bit. Market's up on HUI pair on 20% over the last 3-4 months. But it's not getting exuberant around. What I'm saying here is to get through this trend line goes back to 2020.
Okay.
That's 4 years. That's 5 years ago. The longer that trend line, to get through that trend line, the more energy it would take to push through that trend line. So the longer the trend line, normally the more explosive that rally through that trend line is. The one on that's say just going back a month would not be as strong as the one going back a year. So this one is going back close to 5 years. So you're probably going to see some sort of an explosion through this trend line. And if we don't back away from it right now, which I don't think actually we are, because I got a couple of trend following indicators so far are not backing, or the trend following indicators are actually still showing a bullish divergence. So, and this is, put it this way, anything below 0.12 has been a buy over the years. It's been a longer term buy, but it's been a buy. And we've been below 0.12 since probably about December of last year, and we're still below 0.12. So we're still at a buy according to this ratio on the bigger time frames. When it gets up around the blue area, which I noted here between 0.17, 0.20, things are getting kind of expensive and the market may back off. So we're a long ways from that intermediate term. So this is kind of an intermediate term chart. So trends up. So let's look at a kind of a momentum type charts things here going forward. This is a weekly chart of the cumulative advanced decline. It's bottom window. The next window up is a cumulative or the bottom window is a cumulative up-down volume. Next window higher is a cumulative advanced decline on a weekly time frame. And both of them are trending up. Bicycles occur when you cross the mid-Bollinger Band. That did it in March 2024. So it's been on a bicycle for about a year now. That bicycle became, looks like about 25 on GDX. We're still at a buy, and both those indicators are still moving higher. So this is nowhere near a sell signal on the weekly time frames. And most of the signals in the past are a year and a half to 3 years. Well, this one's 4 years. The last one was 3 years. So we got at least another, at a minimum, 1.5. If they're 1.5 years, we've already been in a year, this should at least go to November of this year.
Sure. And
possibly a lot longer. But there's no sign of a top on this momentum type indicator. And you go, it's a little bit shorter term indicator. It's a 50-day average. This is the bottom window here. It's a 50-day average of the up-down volume. It works a lot better than advanced decline. I don't know why. Really don't care. But it does work better. As long as that indicator stays above zero, the uptrend's intact. And these indicators can stay. This one back in 2019 stayed above zero for 16 months. This one's 5 months. The one in 2024 was 7 months. We've been on a bicycle, looks like about January 1st on this one, so it's been 3 months so far, and it's holding above plus 10 right now, and we're up against that. If you look at the top window there, that's GDX. We're up against the high of 2020, and we're right on that trend line right now, right around that 42, 43 area. Okay. And we actually may accelerate here, because that's, if we don't, we'll probably back off a little bit and test the previous low. But either we're going to accelerate, pop up, or we pull back to support. Either way, at some point, we're going to push through. And we could actually be pushing through right now. So far, since this indicator on the bottom is not really backing away, it's holding up around plus 14. And we're hitting, pretty much a new high since 2020. It almost looks like we're going to push through. But if we don't push through this time, we're going to push through next time. Either way, we're going to go through that line just because of the bigger time frames. So this is probably still should be actually holding your GDX position.
Perfect. Tim, do you have other charts for gold?
Nope, that's it.
Tim, well, thank you for coming on. We'll see you Tuesday. I'm seeing a little bit of a reversal too. We'll see what this volume picks up in the SPY. Tim, thank you so much. We'll see you Tuesday.
All right.